The economic health of the South Bay and Port of Los Angeles harbor area acts as a direct leading indicator for the Southern California economy. After years of severe supply chain constraints and near-zero real estate availability, this region is now entering a transitional phase of market normalization. To maintain operational viability through this shift, corporate and municipal leaders must immediately adapt to massive zero-emission infrastructure projects, recalibrate property valuations, and meet new state regulatory mandates. Look closely at the sheer scale of the Port of Los Angeles, the busiest container port in North America for 26 consecutive years. This chart tracks historical February volume data, highlighting a clear 3% year-over-year increase. Major retailers utilized a pull-forward strategy to accelerate cargo arrivals ahead of Lunar New Year factory pauses, processing over 824,000 TEUs in February alone. TEU stands for 20-foot equivalent unit, the standard industry measure of cargo capacity. To prevent future West Coast bottlenecks, the port is preparing a massive footprint in the outer harbor for Pier 500. This proposed 200-acre marine container terminal will feature 3,000 linear feet of new wharf space. Expansion is tied directly to environmental compliance, backed by a $412 million EPA Clean Ports Grant. The Build Smarter initiative requires the facility to deploy a 100% zero-emission cargo handling fleet by 2030. Therefore, importers looking to secure long-term West Coast supply chain capacity have to align their operations with these incoming, capital-intensive green infrastructure requirements. Moving inland to the South Bay industrial real estate market, facilities supporting aerospace and defense provide a solid economic floor. Installations like the Los Angeles Air Force Base sustain over 6,200 direct local jobs. This graph maps 10 years of real estate data. Vacancy climbs to a 4.6% decade high by Q1 2026, driving positive net absorption, newly occupied minus vacated space. Despite more availability, a secondary trend line shows rental prices holding roughly 48% above pre-pandemic levels. In a softening market with persistent inflation and high interest rates, buyers are actively targeting lower-risk, cash-flowing properties with stable tenants. For sellers, the cost of deferred maintenance on older structures is quickly becoming a major valuation liability. Commercial property owners need to calculate their hold versus sell positions now, before the current market premium on well-maintained, fully occupied assets begins to erode. To protect the region's appeal to corporate tenants, local municipalities are heavily investing in public safety modernization, centered at facilities like the Torrance Police Department. These strategic policing initiatives, including a new real-time response center, have resulted in a 24% reduction in local crime, a metric that directly supports corporate retention. However, city planners are struggling to meet strict state-mandated housing quotas in these highly developed coastal zones. To spur mixed-use development, Hermosa Beach recently slashed its land value recapture fees to $104 per square foot. Land value recapture is a municipal policy that charges developers a fee to build residential units on commercially zoned land. State regulations are also expanding into the digital sector. Under the California Digital Financial Assets Law, businesses engaging in crypto-related activities must secure a state license by July 1, 2026. DFAL is a regulatory framework requiring fintech companies to hold specific operational licenses to exchange or store virtual currencies. While South Bay cities are successfully lowering local barriers to entry through public safety and fee reductions, businesses must simultaneously prepare for these expanding state-level compliance hurdles. Synthesizing this dense intersection of maritime logistics, commercial real estate, and municipal governance requires clear, deliberate communication to secure institutional buy-in. Specialized agencies like Voxel Micro Video Labs convert complex regional economic data into highly shareable, bite-sized visual assets for modern digital distribution. Corporate stakeholders must finalize their real estate divestment matrices immediately, complete their DFAL licensing applications by the July deadline, and update their strategic communications. Securing a competitive advantage in the 2026 South Bay market relies on proactive operational compliance and aggressively broadcasting your narrative to the region.